Excited to have our new indicators updated here on TradingView, moving over to the TradingView platform, and some exciting changes here and tons of flexibility for us to be able to update and create indicators for the purposes that we like to utilize them for. And so in this case, a slight change here on our market condition format each morning. It's going to be very similar, but there's going to be a couple of small changes which I think you'll enjoy. And I'll explain those as we go through. First of all, when we start out, we're going to be starting out with S&P 500, the SPX. We can utilize SPY as well, and we will. I'll be showing you that as well. But one of the indicators that we're using, so we're going to be using the momentum zone indicator as well. That's giving us the color on these, and that is just this momentum zones chart, or indicator, I should say. On your indicators drop down, you can, I've got them favorited right here, but you can just search that in. You can type, even if you just type in TradersPro right here, that's going to pull in these three that are bracketed. Those are the three current indicators that we've got available. That is momentum zones is right here, Fibonacci snap tool, and trend condition on that. So as far as our market conditions, this indicator is going to be giving us trend condition. It's called trend condition, and it'll label essentially it is a combination of moving averages. There's 14 different moving averages, exponential, which are going to be very quick and very responsive. And our measuring stick, our measuring tool, is going to be the number that are in uptrends. They'll shift if they're lower than the prior day or higher than the prior day. If they're lower than the prior day, they'll show up red. If they're higher than the prior day, they'll show up green. Pretty simple. Okay, so in this case, we know that the S&P 500, we've got a good solid, strong bull market, bullish uptrend. We've got 13 and then 1 to the downside. You're going to see what that starts to look like when we do start to see some bearishness in here. And as we talk about the overall momentum of the market, one of the other things that we focused on was what is the breadth of the market. So one of the indicators we're going to be using here is the number of stocks that are above the 50-day moving average. Okay, so, and that's this bottom line right here. This number is 52. So essentially 52% of the S&P 500 stocks are above their 50-day moving average. So it's actually quite weak breadth right here. The trend condition of that indicator is now going to show us that we've got 14 of those trends, 14 of those internal daily trends, all the way from the 5-day trend to the 200-day trend, which are down. Okay, they're bearish, all 14 of those. And you've got this compression. So of this indicator, we're looking for two things. We're looking for the fanning effect, which is, let me grab my drawing tool right here, which is the width of the trend as they fan out, as they spread out. Okay, we're also, looks something like this. We're also looking at the compression of the trends. So we want to look at those two things. We want to, in the analysis, the compression of the trend and the length of the trend. When we talk about bull market conditions are at, 26 point, whatever it was when we were talking about that, this is the distance. And let me actually go back, because that's still going to apply here, is the distance of these moving averages from each other. So when they get a really long way, you get that fanning, and they're really spread out like this. Okay, those trends are not sustainable. You typically will get some kind of a pullback, if not an entire reversal. And we'll start to see those numbers start to shift each day as we're going through these updates. Okay, and again, these are available to you free on TradingView. And again, just go in and type in under your indicators right here. You can just type in, like I said, you can type in the name of it. You can see it right here, or you can just type in TradersPro, and that'll pull that in. This one is a secondary window, so it opens up a new window here as well. So that is that distance. Now the breadth, so this is our internals essentially. S&P 500 price is moving higher, but the internals of the quality of this rally is starting to diminish pretty quickly, and that compression is starting to expand. When we get that compression and it starts to expand, we want to be aware of that. Okay, that's one of the other things we're going to be focusing on. Also the VIX. The VIX which is our volatility index. That's going to be exact opposite of S&P 500 in most cases. It's going to be bearish because a low VIX indicates that there's just no fear in the market. Okay, when it spikes like this, then we're going to get those fear-based signals as well, and it's going to be the exact opposite. So again, we're looking for the extremes for some reversals, but then we're also looking at the trend. So in this case, the VIX is really not giving us anything. It matches the S&P 500 because we have bullishness here. we have bullishness here, even though this is bearish. Remember, the VIX is exactly opposite. So we'll want to watch those in tandem. And then we also want to watch the quality of that S&P 500 trend, which is starting to diminish. It's going to be similar to the buy-sell ratio, and we'll be adding some additional things in here as well. The other that I've got in here is the yield curve, the 10-year and the 2-year yield curve. Okay, now this is a kind of a funky looking chart right here because it looks like this. Well, remember what's happened on the inverted yield curve. An inverted yield curve, anything less than 0 means that it's inverted. All of this data, it was in an inverted yield curve. Well, if an average has to go to 0, this is what it looks like. So this entire move right here basically was while we had an inverted yield curve. And so now we're back into the yield curve actually showing some bullishness. So we'll keep an eye on that as well. That number is, let me just, what have I done here? There we go. Let me just move this over just a little bit, and we can grab that number 10 and 2. Okay. The other one I've got here, and we'll be adding and going over a few different ones. This is the Russell 2000 stocks above its 50-day. Okay. So that actually is still a little bit stronger, and that has been the indice that has been leading this rally here as well. Okay. If we utilize this same structure and we go through and we look at the sectors, okay, we're going to see this same thing across the board on sectors. Now I've got that a little bit too wide. I want to have it a little bit more like this as we're going through these, but we can see that we're getting this bullish and bearish count on these sectors as well. Energy, 11 to the downside. We can see that starting to retrace. We've got the transportation index, which is still bullish here as well. Okay, and as I scroll through some of these, we'll just scroll through these quickly. And again, this first time as we're kind of tightening up the process on these updates, there'll be a little bit of fumbling and mumbling along here, but for the most part, we're going to be really fine-tuning on this overall strategy. In this case, we're looking at just the quality of the trend. In this case, we've got discretionary, which has been quite good and quite strong. And we're seeing there's an example of here 7 and 7. So we're starting to see in utilities, we're starting to see that trend shift. It was really wide. Okay, and as those trends start to get really wide, they're just not sustainable, at least within that trend, the intensity of the trend, okay, the quality of the trend. It's going to be really wide. It may not necessarily reverse entirely, but it's going to have some kind of pullbacks along the way. And as those compress together again, that's what we want. Ideally, what we want when we're looking for new trends to develop is when they're compressing and moving out of those trends. Let me jump over here to a couple of these others. I don't want to spend too much of your time here, but this is a new update going through some of these new ideas. Basic materials, we're seeing 14 to the bearish. So we're seeing some weakness there in basic materials, consumer staples. Again, so I'm also going to be able to have access. I'm going to put the link down here for you to access this dashboard. You'll be able to access this market review dashboard and then save it. You can just copy that and it'll save it directly to your TradingView platform as well. So you don't have to re-enter in all of this. Although you may have to enter in some of these symbols and build out this this profile page on the side on the index page, and I'll have some other trainings to focus on that. IYH also here. This is healthcare showing weakness. We're seeing IYR about flat right here. So we are seeing some weakness in the sectors as well. If we take a look at commodities, we've got GLD, which is compressed a little bit here, but moved back up again. So even on these pullbacks, we're getting some compression. And as the trend starts to continue to advance, once again, you get that move back into that bullish state. SLV, kind of the same right there, compression. And then as it's starting to trend back up, those tighter moving averages are bumping back to the upside. And then here's an example of bearish. This is USO. This is oil to the downside, 14 to the downside. So we get additional confirmation that that trend is down, meaning we just don't necessarily want to try and pick that bottom or try and trade it bullish at this point. while it's in that state. A couple of other things here on the screens. We can pull up these screens. I've got some new settings for you to be able to utilize on that, and also to our Discord room. All of these links will be in the footer of this video that you can access here as well. But this screener is going to be able to go through and show you some of the names that are in new buys. Okay, so a couple names to consider. I actually have got Google in there for today. Okay, if we look at Google, nice move higher. We don't necessarily have to use this. In fact, we probably want to go when we start to look at the individual stocks. You can use that same trend indicator if you want to. It's going to do the same thing. It's just going to give you additional confirmation that you're squeezing from a tight trend and that trend is starting to expand. And that's ideally where we want to enter into new trends, is as it's squeezing together and then it's starting to expand. This will be an area where we're like, okay, the probability of it going much higher, we want to take some profits or tighten up stops. Okay, Google is an example there for today. And also I had one other one, which was BYRN, which was a nice looking confirmation pattern here, and that is also in a good solid uptrend. So go in and set some of these up, play with some of these indicators, and that'll do it for today's update. Everyone have a fantastic day today.